The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Still need to watch Squid Game. All right, so checking in on Bitcoin. The CoinDesk Bitcoin price XBX index is currently over $57,000 now, 57,169, up about 0.8% over the past 24 hours. And the CoinDesk Ether price ETX index is at 34.37, down almost 4% for the day. And the new DFX CoinDesk DeFi index right now at 536, pulling back over 7% over the past 24 hours. And joining us now to discuss the crypto markets is Mannik Dhillon, president of VictoryShares and Solutions for Victory Capital, a multi-asset manager and ETF firm. Hey there, Mannik. Great to have you on the show. So again, we're seeing this rise in Bitcoin sustaining that 57K support, but altcoins, DeFi, Ethereum pulling back. So can this rally be sustained?
Well, thanks for having me back. We absolutely think so. I mean, there are a lot of fundamental catalysts that are developing for not only just Bitcoin, but even the altcoins. So if you think about all of the news we've had over the last month, some of it seemed negative at first, but we've seen Bitcoin push through. So for example, everybody was talking about how China's banned cryptocurrencies. First, it was mining of Bitcoin for environmental reasons and other reasons. That didn't seem to stop hash rates. Hash rates are achieving all-time highs. Then you saw them come out and try to ban cryptocurrency in general. Still, Bitcoin is pushed through. And this is even in the backdrop of regulation, but I think that's part of what might actually be helping. Because regulation, I think, leads to institutionalization over time. And so when you institutionalize an asset class like Bitcoin or crypto assets, you start to get more demand, more people comfortable with starting to invest that haven't. And that's a lot to do with it. And then also, if you think about what's happening in the backdrop of different economies, whether it's the U.S. and legislation around the debt ceiling and things like that, there's a lot of comfort being given to holding Bitcoin right now.
So you mentioned regulation. I'm curious, what regulation specifically you think might be leading to price increases? And also, just more generally, do you think that this is what's driving up the price, these kind of regulatory trends, or is Bitcoin just doing its own thing in spite of what's happening in the regulatory world? I
think there's always a number of things that are involved, right? It's always hard to say that there's one thing driving a particular price movement in any given day or week or month. Some of the regulatory trends that I think are positive and are influencing is, for example, the upcoming onset or approval of futures-based ETFs. And if you have their futures-based, there's still collateral, physicals needed on the other side for those that are holding those futures or to hedge those for those that are making these futures. And then ultimately, speculation, based on Powell and Gensler's comments that cryptocurrencies won't be banned is optimistic from the market, I think, that ultimately a physical ETF or other products will be approved at some point. So if you look down the road, you want to hold the asset today before that happens, probably, because that will be increased demand for the physical.
So, Mannik, we mentioned earlier in the show some of the actions, some of the things happening in China. From your perspective, how much of the demand is due to instability in the Chinese loan market? And is it money fleeing China, perhaps, or fear of instability in the economy? Or are you not seeing any of that flow at all?
I don't think it's necessarily a big driver of what's happening. If you look at it, the thought is, obviously you don't know for sure where the wallets are held and whatnot, but generally the data suggests that most of Bitcoin has been held outside of China, and so mostly in the Western world, and so. The thought process that maybe, okay, I don't want to hold one, I want to go invest in something else potentially. But now with the of cryptocurrency exchanges being banned there, I suspect that it's very, very challenging for somebody to do so if they're onshore, but that's speculation.
Mannik, I know you're in the business of ETFs, and of course, there's a lot of anticipation in the United States that a Bitcoin futures ETF might be approved soon. Though I see from Dan Moorhead, the CEO of Pantera, saying that a Bitcoin ETF may fail to spark a rally, and that the crypto community is living in a world of buy the rumor, sell the fact. Do you agree?
So there's a lot of speculation and news. In fact, right there, speculation that the first futures-based ETF will be approved next week. There are actual physical elements to these markets, right? So if you have futures ETFs that come to market, and there is sufficient demand for those futures-based ETFs, there has to be collateral on the other side of it for those making markets and those asset classes to hedge it. So that should create some demand. I think the larger demand will come from actually physicals, right? So actual physical Bitcoin and Ethereum and other multi-coin products will come to market. We've focused our efforts on the NASDAQ crypto index, a filing there for an ETF down the road. If it's a single coin offering, even Bitcoin that comes to market first, there will be probably a lot of retail demand that has been pent up. So right now, when you think about it, retail investors have had to buy these crypto assets on exchange by themselves and then figure out all the other challenges that go wrong with how do you do that. This further institutionalizes that ownership. Any commingled product, any ETF or mutual fund, even futures-based, says, hey, I can now hold it in a wealth account, my wealth management account. Financial advisors will become a little more comfortable with advocating for the asset class based on the custody and holdings. That creates demand over time.